How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my very own personal journey to amassing $100,000 within my Vanguard brokerage account. Now, since my last video, not a whole lot has changed, only added turmoil when it comes to the market, just given tensions between Russia and Ukraine are actually only heating up day by day. Ultimately, this big question of where and how to invest continues to loom on our shoulders, and here's what I got for you. Keep cool and just stay the course, because as long-term value investors, all of this volatility is actually exactly where we're going to be able to reap the most benefits, picking up these discounted stocks while they are well discounted. Now, amidst all of this volatility, my account has certainly taken a little bit of a beating, falling by $365.25, leaving my account sitting at $85,058.40 on the day. In terms of today's video, I want to jump right to 5 high-quality dividend stocks that are currently trading for discounted prices that, again, as that long-term value investor, we can jump in on them right now and just kick back, relax, and collect on the dividends, as well as their rebound of their stock share price. Before we dive in, tap on that thumbs up button and help me grow this channel. And of course, if you haven't already subscribed, go ahead, make your way over to doing so. I'd certainly love to have each and every one of you on this journey with me. Now, YouTube, let's go ahead and dive right in. Alright, YouTube, so before I actually get into today's video and run down these 5 dividend stocks that are trading for discounted prices, I just want to talk about this war between Russia and Ukraine, a potential World War III that we have in front of us. I am by no means an advocate for war. My heart certainly goes out to all of those in Ukraine and those in Russia who look at Putin with the same eyes that I do, that this man is a madman and must be stopped. In terms of investing during all of this volatility when there's a war, I look at it as a nature of circumstance. I did not cause this war. You did not cause this war. It is happening. And as an investor during all periods of volatility, I'm going to be doubling down on high quality investments to capitalize on the volatility in and of itself. And perhaps by profiting from this volatility, we can in fact give some of that profit away to those in need. And that's the lens of perspective that I'm looking at this entire situation from. Now, with that being said, let's kick us off with the very first stock I want to talk about, which is Amcor, ticker symbol AMCR. Now, Amcor is a global packaging company. It was founded back in 1860, and it's been developing flexible packaging, rigid containers, cartons, as well as closures for food, beverages, medical devices, pharmaceuticals, and personal care products. Truly, it's an under-the-radar type of investment that we can make that is just incredibly lucrative given the absolute necessity of what they do. And over time, since their founding, they have just continued to grow into a dominant player within the industry, with a market capitalization sitting at $17 billion and consistently exceeding analyst expectations. Just this past quarter alone, they brought in $225 million worth of net income. Yet, amidst all of this volatility in the market, Amcor's stock is not an exception to the rule of all of these stocks sliding. It fell from around $12.41 down to around $11.29, which may not seem like a whole lot, but that is actually 9% of a change. And right now, Amcor's stock is trading with a PE ratio sitting at about 18%. So in my opinion, it is certainly a great time to pick up Amcor's stock, especially just given it's actually a very cheap stock to just hold within your portfolio. And let's face it, Amcor is not going to be disappearing anytime soon. In terms of their future, analysts only predict that it's going to rebound, shooting right back up to $12.96, and actually at a high stock share price at over $15 per share. And until it reaches that $15 per share mark, we're just kicking back to collect on Amcor's dividend, with a current dividend yield sitting at 4.2%. Now, Amcor's been dishing that dividend out for 38 consecutive years, increasing it year over year, making Amcor a reliable dividend aristocrat. Moving to our second dividend stock opportunity of the day, I want to preface by saying price is what you pay, whereas value is what you get, because I actually see this one being kind of disputed as I throw it out here, but it is McDonald's, ticker symbol MCD. Now, I know I don't need to introduce McDonald's and tell you all about it, but I do think it's important for you to understand just how much of an impact McDonald's has had on this world. It was founded back in 1940, and since its founding, it's built an empire of over 38,000 locations operating in over 119 countries. It's not just America's largest fast food chain, but it's a beloved fast food chain on a global scale, which makes McDonald's McDonald's certainly an investment that I want to have within my portfolio. And while many of you may not see McDonald's as such a discounted opportunity to take advantage of right now, I personally go back to Warren Buffett's advice on buying into wonderful companies at fair prices versus fair companies at wonderful prices. Now, McDonald's is that wonderful company I want to be able to double down on, especially amidst all of this volatility where McDonald's stock share price actually slid, falling from around $269 a share down to around $235 a share, about a 12% change. Understanding why this is happening, of course, between the tensions of Russia and Ukraine, McDonald's is right in the middle. In Putin's eyes, McDonald's is definitely an icon of capitalism and therefore may face Russian retaliation. However, we're also facing some problems here at home where McDonald's was just sued for $900 million. But folks, with McDonald's being, well, McDonald's, it's not going to be disappearing anytime soon. I mean, talking about a global icon here, $175 billion market cap, year-over-year growth. It is time to take advantage of McDonald's with its current PE ratio sitting at 23.5%. While yes, it could go down a tad more, I'm willing to pay the price for it, especially just looking into their future. Analysts see their stock certainly rebounding back up to a median stock share price of $283 per share and a high stock share price at $306 per share. Now, McDonald's has been paying dividends out for 46 consecutive years, increasing their dividend year over year, so another dividend aristocrat, with their current dividend yield coming in at 2.29%. Next up, we're going to be talking about the world's leading manufacturer of construction engines as well as equipment. We're talking about Caterpillar, ticker symbol CAT. Caterpillar was founded back in 1925, and since its founding, it has just been a dominant player within the industry. I mean, seriously, there is not a whole lot of competition that even comes remotely close. They're sitting at $104.85 billion market capitalization. Now, it's been on the decline for some time given inflationary headwinds as well as supply chain constraints, which prompted weaker earnings, and these geopolitical tensions only added to Caterpillar's decline, falling from $230 per share down to around $195 per share, about a 15% change. Now, just taking a look at Caterpillar's current PE ratio, we're sitting at 16.54%, and I argue a strong bull case on picking up Caterpillar while it's currently discounted, especially as we've been rounding the corner on the pandemic and supply chain disruption issues should eventually come to a resolve. This is leaving Caterpillar in a great position to capitalize on more and more demand over time, which is only exciting analysts, allowing for analyst expectations to come in at a median stock share price for Caterpillar at $241 per share and a high stock share price sitting at $347 per share. Now, in terms of Caterpillar's dividend, it is sitting at a current dividend yield of 2.31%, and it's been shelling those dividends out for 27 consecutive years, increasing that dividend year over year. So there you go, another dividend aristocrat. And now, as for the last two stock opportunities of the day, I want to dive into the financial industry, given it is one of the hardest hit industries amidst all of this volatility. The very first stock I want to talk about is JP Morgan Chase, ticker symbol JPM. Now, JP Morgan is not only America's largest bank, but a global leader when it comes to financial services for corporations, governments, as well as institutions. JP Morgan has had a very healthy balance sheet for a heck of a long time. However, with all of this volatility, investors are just not impressed. The company has certainly been taking on losses, both in terms of revenue and net income, ultimately leading to a stock share price decline as it fell from $168 per share all the way down to around $134 per share. That is a whopping 20% change. As of right now, their PE ratio is sitting at 8.75%. Now, I'm just going to go ahead and toss this all out for you guys to think about. JP Morgan is just one of those banks, in my opinion, that is just too big to fail, which certainly allows me to have more confidence in investing into JP Morgan. Not bat an eye, lose a minute of sleep. I only foresee it rebounding. So too do analysts, coming in at a median expectation of $175 per share and a high stock share price of $200 per share. And while JP Morgan, along with all the other banks out there, really don't make the dividend aristocrat or King's list, JP Morgan is certainly a reliable dividend investment, in my opinion, and shelling out dividends for 32 consecutive years, with their current dividend yield sitting at 2.87%. And finally, as for our fifth dividend stock opportunity on the day and the heaviest discounted stock opportunity I have for you, it has been beaten down now for some time. We are talking about T. Rowe Price Group, ticker symbol TROW. T. Rowe Price Group is a global investment management company that offers funds, advisory services, and account management, as well as retirement retirement planning for individuals as well as institutions, with clients in 47 countries, and being founded back in 1937. They've since then amassed a market capitalization sitting at $31.65 billion. Now, T. Rowe Price Group has the vast majority of their assets in the stock market. So ultimately, when the stock market is incredibly volatile like right now, T. Rowe Price Group is going to be taking a massive landslide in terms of their stock share price. Now, that is exactly what we've been seeing throughout the past couple of months here, as it's been on its decline, falling from around $204 per share all the way down to $138 per share. That is about a 32% discounted stock opportunity, which is a massive, massive opportunity for all of us long-term value investors to scoop up T. Rowe Price Group at these current valuations. Now, currently their PE ratio is around 10.54%. Again, just numbers that we like to see as long-term value investors, especially as analysts only foresee a rebound in sight, coming back up to a median stock share price at $159 per share and a high stock share price at $198 per share. Now, T. Rowe Price Group is a dividend aristocrat with 34 consecutive years worth of dividend payments and increases, and their current dividend yield sitting at 3.02%. Now, YouTube, that is it between Amcor, McDonald's, Caterpillar, JP Morgan, and T. Rowe Price Group, the 5 dividend investments that I'm going to be watching throughout the course of this week and into the month of March. If you liked what you heard, you learned something new, drop those comments below. Let me know your thoughts on these companies as well. Understand that I'm not a financial advisor, so just make sure before making any investment decisions, you do your own due diligence. And of course, tap on that thumbs up button and help me grow this channel. If you haven't already subscribed, make your way over to doing so. I want each and every one of you on this journey with me. Now, YouTube, until the next video, I will see you all there.